Welcome to Good Money Guide. Today we're talking to Felicia Hjertman. She's the CEO and founder of Tillit, which is a new or relatively new investment platform that allows you to invest in a range of funds. So we're going to have a chat with Felicia. We're going to find out why she set up the platform, who it's for, and a little bit more about her, and also where she hopes the business will go. So Felicia, thank you very much for joining us today.
Thank you for having me. Great to be here.
It's always nice to talk to new platform founders because it seems, I don't know, it just seems to me as though there's a new one opening up every day, and it's nice to find out what the USP of that platform is, because essentially it's a phrase I use all the time. Essentially, every stockbroker and every investment platform is just offering, they're all selling the same biscuits, which is sort of access to the market, but it's how you do it and how you interact with customers that I think makes the difference, and what essentially keeps customers sticky or with you or investing with you in the first time. So it'd just be great to get your thoughts on the industry and overall, and tell us more about Tillit and why you set it up. So should we just so first question, just straight off the bat, why did you set up Tillit? What was the what was the impetus for getting it off the ground?
Well, as a lot of founders do, I started with essentially the idea came from having a problem myself, and that I was quite frustrated with, and essentially Tillit was born out of trying to build something that could help solve that. And that problem was really, so I used to be a fund manager before, so I used to run money for 8 years, and with a firm called Bailey Gifford. And in that process, I had a lot of experience dealing with clients, managing their money, mainly institutional clients like pension funds, sovereign wealth funds, and so on. But I also ran an investment trust, which typically is more veering towards individuals. But what I was noticing in that period is that the experience that an institutional investor has is completely different to that we have as individuals. And so the frustration that I had was, well, how do I go about managing my own money, my savings, my pension, because I wanted to pick my own things and know what I was investing in, and make good decisions and for my long-term savings. And I found the process of doing that on the platforms that were out there at the time made that really difficult and frustrating and time consuming, and that's for me as an industry insider. And it was also kind of night and day from what is that experience as an institutional investor. So and I'm sure we'll dig into that in terms of what makes Tillit different and what we're trying to do differently to help customers. But that is essentially trying to marry those two together and essentially empower me as a personal investor to be able to make the best decisions I can based on what's right for me and my time horizon as a personal investor.
Okay, so how does Tillit do that compared to someone like Hargreaves Lansdown? I think if you use Hargreaves Lansdown as the sort of benchmark investing platform where you can invest in basically anything you want, whenever you want, how does Tillit do it differently to the major existing incumbents?
I think with the other kind of the main leading platforms in terms of market share and so on in the industry, a lot of it is based on access and volume, and as we refer to them as fund supermarkets, and that's great. I think there's been a lot of progress made generally in the industry in giving personal investors access to more things that we can invest in, which is fantastic. I think the issue with that is sometimes access without education, access without knowledge and understanding. Well, here you have all of this choice, which is brilliant, but then how do you make a decision? That's the hard part. And so I think with that in mind, we believe in quality, not quantity. Now, there's only so many asset classes, there's only so many regions, there's only so many investment styles that you can invest in. That doesn't mean that you need 347 in every single style. And what you do want as a personal investor, even when it was my full-time job to run money, most people don't have the time to then also do an additional job of spending hours and sometimes days narrowing down those thousands of options down to what is the right one for you, because you need much more than just seeing a backward-looking performance chart a fee and a bio of someone who went to Oxbridge 20 years ago and some top 10 holdings, that doesn't tell you about how that fund might perform in the future. To understand that, you need to understand the philosophy, the process, how decisions are made, how it's different to other funds investing in the same region or style or asset class. And that's the thing that's missing. That's the thing that takes up a lot of time, covered usually in a lot of jargon, and you have to go elsewhere. And it's quite a big job. And I'm a self-directed investor. I like to be in control of my money. A lot of other people do. I think that's great. I think more people should. But I understand it's really hard and it takes a lot of time. So what we're trying to do with Tillit is to take all of that heavy lifting job away from you. So we roam the market for what we think are best-in-class funds across regions, asset classes, and styles. And then we do a huge amount of research on those funds. And we offer essentially what we call the Tillit universe of funds that are from everything from a passive multi-asset tracker to a specific kind of actively managed investment trust that perhaps only invests in Vietnam in public and private companies, and everything in between. And so that there should be something there for everyone. But ultimately what we can do, because we have fewer, we only offer the best in class. It's like a best buy list on steroids.
I was going to say, it's almost like a curated best buy list of what everybody else offers. Just cut out the fluff and just go for. Can you do a sort of blanket, just invest in all of them? If you've come up, how many funds do you have?
So we have just over 100 at the moment.
So if you've got 100 funds, so that's a sort of best buy 100 funds, presumably diversified across all asset classes and regions. Can I come onto the platform and go, yeah, I'll have a little bit of all of them? Could you do a Tillit ETF? Will you be launching a Tillit ETF that invests in everything?
You're not the first person to mention the ETF idea, and it is something that we are thinking about or have been thinking about, and who knows, might come in the future. I think that there is a way, if you really wanted to invest in all of them. We have a portfolio builder tool and like a basket checkout, so you could literally put in something in every single fund, move it all into deals. So you press one deal once essentially, and we move them all in one direction. So you don't actually have to go in individually, place that deal, check out, and so on. So you could technically do that if you wanted to place it in all of them. But I think the key thing is a best buy list. You have that on Hargreaves, you have that on the other platforms, but is what do you do with that? Because we go much more qualitative focus in terms of the number of those funds, it's still a very broad universe, but what it means is that we can go much deeper on those funds. So that information that I talked about earlier in terms of it's not just the quantitative backward-looking information. We write a Tillit view, which is based on a huge amount of research, but it's very succinct, distilled, kind of almost like an executive summary of like, what is this fund? Why is it different? What are the key risks? How might it perform in different economic environments? And why might it be right for you? As well as I don't know about you, I mean, but I've always found fund names to be an enigma of like, whoever comes up with them.
Some of them are hilarious, aren't they?
It's ridiculous, and it means nothing. And even to industry insiders, a lot of the time, you're like, what does this actually mean? And so what we did is we take that the fund name, which isn't what this is about. What investing is about is trying to find something that is aligning with your goals and what you're trying to achieve. And to do that, you need to understand what the fund is trying to do. And so every single fund on the platform, we've given them like a title, like a one-liner that we call it, which describes what that fund does. So let's take something that was managed by Baillie Gifford, which is a very well-known investment trust, Scottish Mortgage. Now, what we do with that one is and with every other fund, is we give it one title, such as investing in change makers around the world in public and private markets. Straight away, Scottish Mortgage, people even think that they still invest in like Scottish mortgages, where
it does
that tells you what it does. And it
does need a bit of explaining, that Scottish Mortgage trust, doesn't it? Because, you know, to the untrained investor, you may think you're investing in subprime mortgages or something like that, whereas actually isn't it just mainly sort of Apple and the FANG stocks and the FANG stocks? You know, well, not quite so much nowadays, but it did very well on the back of those big US tech companies.
I think the key thing is most fund names don't make sense, and it's a red herring. And what we're trying to do is ultimately help you find the right thing for you, and so that you know what you're investing in, you're making that decision based on, you actually know what's in your portfolio, you actually know what it's doing. We have people who come to us who've been on the kind of traditional platforms for decades. They come to us, they read about the funds, they make the decisions, and they say, I finally, after more than 10 years of investing, understand what this does. Like, that for me is huge. Like, why isn't everyone doing that a lot more? There's a responsibility as a platform to actually help people make good investment decisions, not just buying anything. It's helping people actually make good decisions. So that's what Tillit's about, is going deeper on those funds, giving you those tools. We've interviewed almost 60 fund managers in a very unique format to also help you understand how they think more fundamentally about investing and making decisions, and essentially giving you everything that you spend so long trying to find elsewhere, but on one platform, so you can make everything on Tillit.
And so what's your view on investment advice? Because obviously one of the things that separates, platforms from another, and one of the things, you used to be able to do is, have a chat with your customers and say, listen, I think this may be appropriate, and this may not be. And obviously, we know the way the world works is that, small accounts are great. It's really important for everybody to start investing with, no matter how small the amount, you should get going straight away, get money in the market. And because the longer you're in the game, the better chance you have of better returns. But for the bigger customers who perhaps don't want to trawl through a list or anything like that, are you able to are you able to have a chat with them? Are you able to offer them sort of direct advice? So if they're saying, listen, this is my investment strategy, I want to invest in ethical, let's take the Japanese market, because that's what you ran, wasn't it? If you look at, I'm interested, I think the emerging markets, I think Japan's going to outperform the S&P. Can you suggest a fund like that, or do you have to do it in a more broad way by answering the question?
Yeah, so we have a team, so you can speak to someone at Tillit about questions about the funds or anything like that, or about the platform. So you can speak to someone. When it comes to advice, we're not regulated to give personal financial advice, and I think there is a role for that service. In my personal opinion, a lot of people who pay for financial advice at the moment don't actually need it. And there is a huge amount, if you have a very complex financial situation, you need tax advice, you need legal, estate planning, whatever it is, advice plays a really, really important role. But a lot of the time, when you really listen to what people are asking when it comes to investing advice, they just want a bit of help. And I think the whole industry is so afraid of the word advice that you hear it, and as individuals you use the word advice, like I want a bit of advice about this and that, but because we think of regulated advice with capital A, it's almost like there can't be a conversation, and you don't listen to what the customer is asking. And actually, a lot of the time, the vast majority of the time, they just want a bit of guidance, and guidance we are allowed to give. And we believe that the industry isn't going far enough in terms of actually providing people with relevant guidance. A lot of the time, it doesn't have to be personalized to you and to your situation. You just need some good high level advice with little a, which is generic, that helps a lot of people make better decisions. And that's where we're quite excited, and how far we can take that to really help people to not have to go up to that hurdle, and then also paying for personal financial advice when they might not need it.
I think that's a really great point, actually, the difference between guidance and advice. Because if somebody comes to you and says, listen, I just want to invest in some funds that track the Japanese market, I suppose it falls under guidance for you to say, we've looked at all of the funds that track the Japanese markets, this one's our favorite. Can you say this one's our favorite, or these ones may be appropriate for you? Is that about as far as you can go? But you can still sort of guide people towards the right funds, rather than just saying, oh no, we can't recommend anything in case the market falls out of bed and all of a sudden I've said that's good. So
yeah, so what we can do, because we are able, like one of the many side benefits and consequences of the fact that we have this curated list and have written a lot of research that we also share with our customers on these funds, whether it's the Tillit views or our transparency reports or whatever it might be, recommendation notes or update notes, we can actually drive them to, instead of saying you should pick this one versus that one, we can say, okay, let's say you pitch up and say, I'm interested in, should I be exploring Japan? Well, we can say we can lead them to this insight article about investing in these types of markets. We can lead them to this kind of filter on the platform, like here's how you find these ones. And then we can tell them, okay, in the Tillit view section, you have this one, maybe compare this section with this section across these different funds. And you get an idea for which of those funds that we offer that invest in Japan might be the right one that that aligns with your time horizon, your risk tolerance, volatility, whether you want passive or active. There's all kinds of things. So because we kind of don't have to go into the personal advice, because we've already done a lot of work up front that helps you get to the answer yourself, but we can direct you into where you see that information on the platform in a way that you can absorb it and then make a decision yourself and back that view.
And let's just chat about the company, or your sort of hopes and dreams, and so where did the name come from? I love a palindrome. I think it's great, but where did the name come from?
Yeah, everyone loves a palindrome, particularly branding people love a palindrome. It's just it's a coincidence that it's a palindrome. So Tillit actually means trust in Swedish. I'm Swedish, and the way that we came up with this is that we wanted a company name that had meaning to what we do, was easy to pronounce, one word. Finding a name for any company is actually incredibly hard, because you also want to trademark it and all of those things and make sure that you have the rights to do that. So we went through a process of, we wrote down all of the different words that we can think of that we thought was synonymous with what we believe in, what we're trying to do with Tillit, wrote it down in English, basically couldn't get any of them. And then it was my co-founder's wife who, I think it was her suggestion or Paul's suggestion, to translate the list into Swedish. And for me, because I am Swedish, I don't look at those words in the same way as someone who doesn't speak the language does. And she was the one who picked up, like, what about this? What does this mean? And that was, we have a photo of her holding that Post-it note with Tillit, which, and trust really is the holy grail of financial services, of money, of investing. And we want to build a platform that you trust. You trust us, you trust the funds that we put on, you trust us to tell you if something goes wrong, you trust us to essentially keep your long-term savings with Tillit over time, which is also how we structured our fees and everything else. It's all based on long-term loyalty and trust, and that's what
I like the loyalty discounts. The longer you're with you, the cheaper it is. I think that's quite good to keep clients sticky.
I think that's how, but genuinely, I think that is, I pitched this idea, probably shouldn't say that actually, pitched this idea to Bailey Gifford as well. I think there is an element of how fees are, I understand, for the scalability and so on, but assets also, if you do a good job, clients stay with you for a long time, and over time, markets rise, assets generally grow over long periods of time, and there isn't benefit for, just because you have more money to start, why should you pay lower fees? I think everyone should benefit from taking a long-term view, and as those assets grow, also having that fee reduction. I think it's only fair. I think it's aligned. I think the whole industry should be doing it, frankly.
And I think it's I think fees are an important point as well, because a lot of these new apps come to market and say we're going to do everything for free, but then of course they don't make any money, and then they go bust. So I do think it's important for investment platforms to make money, because you're trusting. Obviously, when you invest in funds, it's protected in custody and that sort of thing. But I do think it's important for investment platforms to make money.
Just on the free point, there's that saying, which I think people often forget, is that there is nothing that's free. If it's free, then you're the product. Yeah. And I think a lot of people forget that. And I don't want to have a dig at some people in the industry, but there is nothing that is free. It's just that you may not see how they're making money off you in a different way. And I think transparency is such a huge thing that is lacking in this industry. And it's very easy to confuse people around what in aggregate are you actually paying to use a particular platform. We only have one fee. We absorb the trading fees. There are no other hidden things. We pass all of the interest that we earn on invested cash straight through to you. All of that. It's all because it is yours. You should know how you're making a decision. You should know what that costs you. And I think, again, the industry can do a lot more there. But yes, so in terms of our fundraising, so we've raised a couple of rounds of funding, both from venture capital as well as angels who are ex-industry or still in the industry. And so there's a huge amount of, as we say with Tillit is both built and backed by industry experts, and that really rings true to what we do and what we're trying to then pass on and to the end consumer.
And then, where do you hope the business is going to be in 5 years? Do you see it? Obviously, as you grow and onboard more customers, do you still see it in 5 years' time as a curated platform of 100 funds, or do you think you'll eventually branch out into other things?
Yeah, I mean, it's still early days. So we opened up to the public at the end of 2021. So it's been like a year and a half essentially being out in the market. And that's been an interesting time, as you know, as well, in terms of what's been going on in the world. So for us in the long term, generally, I believe that I very much is a core principle of Tillit of most of the funds either aren't worth your time or definitely aren't worth the fees. And so the idea of stepping away from creation would probably be an unlikely one, but that doesn't mean that we're hooked to a particular number. And the key thing about Tillit is that every personal investor is different. Your time horizon, your risk, your goals, all of that is different. But what you should feel like when you come onto Tillit is you can find the right things for you without feeling overwhelmed. So any single category interested, you should have like a comprehensive number of funds to be able to explore and compare and decide. So what the end number of funds we have on the platform is going to be, I don't know. It's about making sure that is a rich and diverse universe for the personal investor. But I think we see the UK very much as this is our test market. There's an investing culture here which is strong but growing very much, and I think there's potential to do that elsewhere and to really bring this concept to personal investors elsewhere. The key thing is really ultimately to empower people to feel confident and in control of their financial future and their long-term investments. There's a lot more focus on that in the world and society in general to put the pressure on the individual. We won't be able to afford to retire if you don't put our savings into risk assets, etc. And so there's a lot more responsibility to put on the individual. So then we need to step up and give everyone the opportunity to then do that and to do that well. And that isn't just in the UK that is a problem. So ultimately, over the long term, we want to be able to help more people do that.
Okay. And what's been the best part of running the business so far? It's quite exciting running a business, isn't it? But it's full of headaches and successes. So what's been the best bit so far? Has there been a moment where you thought, yeah, we've nailed it here, or like, I'm really proud of what we've done here?
Oh, I mean, I think I never think that, and my team would say that as well. I never think we nailed it. I think I'm a perfectionist. I always think that we can do much better, and that is part of the excitement of running a business, building a business from scratch, like building a product from scratch, is that you're always wanting to do better and to do a better job for customers, build a better product. It's a competitive market, all of that stuff, and that's very exciting. However, I think there's so many highlights. I think part of it is a privilege to be able to give someone a job and for them to want to work with you on this goal, and we're moving in one direction. We have some brilliant, phenomenal people in the team, and being able to attract such people and to stay, and they stay with you and you're building this together is a real privilege and something that I personally take a lot of enjoyment out of. I think the other thing is indeed, I alluded to it earlier, is when we hear customers, because I think there's a lot of people trying to address investing from different angles, and there's a lot of people not investing in at the moment who should be investing, and that is also a big part of it. But there's almost this kind of assumption that if you've been investing for a while, you know what you're doing. And we, when we do customer interviews and we speak to people investing for 10-20 years, and they're talking about how they do this, and then at the end we're like, so you're quite an experienced investor, and they go, no, I don't really know what I'm doing. And I think that's the thing of a lot of people feel that insecurity, and almost the longer you've done it, the less you can admit that. And so what we're trying to do is, what really makes me happy is when it doesn't feel like we're telling people what to do, but they can self-educate, validate whatever they know or they don't know, and they can explore and kind of build it over time. So when we see that people really value that and get a lot of satisfaction from that and enjoy the product, that for me and for the whole team is always the best part.
Okay. Well, I suppose it's a good point, really. Actually, I suppose most private investors are inexperienced just by the very nature of long-term investing. Is you shouldn't really do it that often. You should just do it and then do nothing. Almost the more you tinker with your pension or your long-term investments, the harder you're going to find to beat the market. I think
Absolutely.
Investing, if you're going to invest, leave it to the professionals sometimes. What about the worst? What's been the biggest challenge other than compliance and regulation?
Other than, sorry?
Other than compliance and regulation.
I mean, that is a challenge for sure. I think in general, this is the hardest thing I've ever done in that, like, it is incredibly hard to build a business. And I think if I'd known how hard it was going to be before I started, I'm not sure I would have. But that's part of the beauty, right? Is that you don't see the tip of the mountain, the top of the mountain. You just keep climbing, and you carry on, and eventually you've made it to the top. And we're still, it's a very long journey to come. But there isn't one major like setback or something. It's always challenging. Regulations challenging, building a culture. So we're partly virtual, like we're a hybrid model. So we have an office in Edinburgh, we have an office in London. We split the team across Edinburgh and London, and making sure that there's a cohesive culture and everyone feels included, involved, and empowered through that is challenging. Raising money is like a crash course in rejection. There's all
I know, it's
kinds
heartbreaking,
of,
isn't it? I think
yeah.
if you can't take rejection, you can't run a business.
No, definitely not. Definitely not. And that's the thing. Like, if everyone agreed with you, then there probably isn't a very, unusual idea. It's not going to get you that far. It's the contrarian ideas, it's the things that people think that you're mad for doing or isn't going to work. And those are the people you want to seek out to also tell you that. And then you know that you can work on the answers to that and so on. So it's just, there's a lot of challenges every day. But you also learn so much every day, and I think that is that is just, whilst it's the hardest part of the thing I've ever done, it is by far the best thing I've ever done as well.
And obviously, you've managed a lot of money over the years, particularly in the emerging markets. What would you say if you had like a sort of top tip for investors on how to get started investing, or the mistakes you see a lot of retail investors make? What's the sort of one thing, if you had a sort of nugget of information that you could give to people to make them better investors, what would it be?
Well, I'm actually going to say something that I think isn't just in personal investors, and it's professional investors, and it's something that I think everyone benefits, because it's about human behavior and behavioral biases and so on. Is that we all like to, whether it's hindsight bias, it's like correcting something that, oh, I made this decision because actually of something else. So the thing that I think is so important is to keep an investment diary. And that doesn't have to be like you write pages and pages of like, oh, this fund, I'm really excited about this, or I'm really excited about stocks, whatever it might be. But what that diary is for is to, when you make a decision, to write down, why did you buy it, and what, if anything, are you looking for, what would make you change your mind? Because if you write that down, even if it's literally 2 bullet points, when you get into a situation further down the line, when there might be volatility in the market, personal investors are particularly prone to buying high, selling low. All investors are, but it's that thing of like panic. It's not a strategy, and all of those things of trying to find out, how do you make a decision when everything feels like it's going wrong, and having something to go back to, of looking at, well, what was past me making a decision on, has that changed? No. Then maybe I shouldn't make a change in my portfolio, or has that changed, whatever it might be. But it's holding yourself accountable, but also learning from the decisions that you make over time, understanding who you are as an investor, understanding the things that your own trading behavior, because it's very easy to not realize that if you don't write that down. So I think for me, it's keeping an investment diary is beneficial for any investor, whether you are managing your own money or someone else's.
Right. And for those that want to dive a little bit deeper into really understanding how the markets work, is there a book you could recommend, or is there a sort of service you've used historically that you found really helpful, or do you have an investment Bible that you think people should read to understand how the markets actually work and how investing actually works?
So I mean, I've read a lot of books in this subject, and both through my time at Baillie Gifford, but also since. And I think there's a lot of, and I'm a little bit different because I used to be a fund manager. So I'm trying to kind of take this, most of the people watching or listening to this probably aren't fund managers. So trying to take it out of that angle. And I think it's more kind of, there's 2 books I would mention which are very, I think, helpful for people, whether you're starting out or you've been doing it for a while. And one is more broadly on money, which is called The Psychology of Money. And that kind of takes you through all kinds of different things, that touches on behavioral finance and so on as well. But I think The Psychology of Money is one. And I think the other one that would be helpful, because I'm in the fund space, and I think people think of funds, equities is sexy, equities is exciting, it's all very cool. Versus funds is like, oh, that's really boring. It's like, it's not actually. There's a lot of different exciting things in there, and just understanding how they work. So there's a book called The Intelligent Fund Investor, which is great because it talks about the differences between active and passive, and what you might want to look for, and understanding how all of these things come together. So I think The Psychology of Money and The Intelligent Fund Investor are probably the 2 books I would say really, even if you've been doing this for a while, are quite helpful to like bring that all together and the things that you should think about without having to spend 14 hours a day working on it, essentially.
Okay. What's been your best investment today? Do you remember that off either personally or professionally? Is there an investment that you really, really
I
nailed?
think yeah, there's a few professional ones, but also what's happened to them since. I mean, I used to manage Japanese small cap companies, right? So it's very niche things that no one would ever heard of. I think in my personal portfolio, there's particular exciting stocks. I mean, I used to own this Russian thing, which certainly now is my worst investment because obviously it's now worthless.
Yeah.
But before that, it was probably the best performing investment I've made, which was a Russian company called Yandex, which is like it's like the Google of Russia.
Yeah.
It's a fantastic company, extremely well run, all of that stuff, and it just happens to be Russian, but that was a really high quality company that I owned PA as well. But all of this is kind of decisions that I made many years ago, and that is part of it. Is I try to hold things. If I buy something, it's because I want to hold it ideally forever, and I don't really sell things. So in that sense, if it goes to zero, it goes to zero. But that's the beauty of equity markets, right? Is that if you leave them be, there is uncapped upside, and that's what I'm hoping for the long term.
All right, well, brilliant. Well, Felicia, thank you so much for telling us all about Tillit, and we look forward to following your progress over the years. I hope it all goes well. Actually, I'll just make a quick note out to any of your potential customers or customers. If you have used Tillit, do come to the Good Money Guide. Tell us what you think of them. Just Google Good Money Guide Tillit. Well, Felicia, thank you very much for talking to you. We'll catch up soon.
Thank you so much, Richard, for having me. I really enjoyed it.